Hey, good morning. It's November 5th, 2025, guys. And let's take a look at our pre-market prep. So far, I'm on an awesome streak. I love it. It's been really good, clear context in the past, I don't know, week since I've been doing these pre-market preps, which is great. I'm not surprised. This is a great approach to looking at context and how the regular trading hour session is likely to develop. And if you've been watching, you know I use data. So we're using 17 years worth of data and some machine learning to help predict which way and how the regular trading hour session is supposed to or should form, most likely. We're trying to put probabilities into our favor using data. So if we take a look at yesterday's video, let me just pop this open. And all right, good morning. It is November 4th, Tuesday, November 4th, 2025. And what we were kind of expecting to have happen. I don't know where it is on here. Sorry, guys, hang on. Look through this. Okay, so during the regular trading hour session, a new high, a new low, or where we'll end up with both a high and low. And today we ended up with this machine learning algorithm predicting, at the time, this was like 7:30 in the morning. Okay. 8:30 Eastern time, right? We predicted that we would actually very likely get both a high and a low during the RDR session. This is what gives me my context. And so again, accuracy. And in that case, it's measured from the start of the ADR session. So what we needed to do was we needed to kind of like span this box right here. And so even at this point in time, you have too many boxes here. I love using it for context. It's really great. I did have some short signals through here yesterday, by the way, and it was moving so fast, it just didn't trigger me in, unfortunately. Can probably get something like this, though. Okay, if we come back up into here, then it's a little bit more tricky. What's going to happen? Okay, range expansion. We're still here. If I take two, so I'm looking at range contraction, something like this. So this is kind of what we're looking at. We're looking at one of these two models, right? So the range expansion model, then the downside model. And so, the range expansion was the dominant model. And then the other thing that I mentioned, I think I mentioned at the end of the video, I was just kind of talking about how if we do form this kind of range expansion model here, that we're very likely to go up to this level here. Okay, so this is the beginning of what's called our range contraction. So we were in what's called a range contraction yesterday, and that we wanted to test this area right here if we were going back up. So that would be kind of our target area if we're looking for a target in a trade. So let's just take a look what happened yesterday. Surprise, surprise. So this is the bottom of our range contraction right here. And we get this nice move down like this. I was still expecting us to come up because remember, we're either looking for this kind of structure or this as our dominant structure. So even with a strong bar pushing down on the open, we're still looking for a long and for it to go back up, which it did. And it went all the way up, and this is so cool. That's why I love this approach. Just want you to see here just really quick. Boom. Where did it go? Boom. Look at that. To the tick test of this level. Perfect test. And then after that, it was done. Longs were done after that. You can see that. I'll just go off replay. You can take a look. Yeah. So to the tick, tapped it, came back down, and we're all done. Oh, hang on. What's playing in my background? Let me turn that off. Is that better? Hang on. I I probably had yesterday's video up. Sorry guys. I have my desktop audio as another input in my OBS. So that's a good mental note. I need to fix that. All right. So anyway, that was just a recap of yesterday. If it's crappy audio, then just go back and look at yesterday. You can compare for yourself. But it was a perfect day in terms of we were right on in top of kind of the expectation, which was even though we got this move down, back long, target back up here, and then we kind of really just didn't do much after that. All right, so let's talk about today. And today is quite a bit messier, and it's messier because for a couple of reasons. So one is, really not really a couple of reasons, really just one reason, which is that we had this short move down here, okay, during the ODR session. So we're upside X plus. Okay, you've heard me. I don't know if you haven't been watching all the videos, you may not have heard me, but these are like my least favorite patterns where you get like an unbroken upside model like this, and then you get a short confirmation. And because anything can happen. Like it could either just keep going up, right? Because the bulls will come back in, but they faked you out right here, or it's rotational because the bears were pretty strong. They're like, kind of want to come back and kind of retest this. So this is kind of my least favorite pattern, and it shows up a lot more recently for some reason. But let's take a look at the data itself. So it's Wednesday, upside X plus, and we have a short confirmation. So let's take a look. So this was yesterday's, by the way. So all of yesterday's. Okay, so we had upside X plus, short, and I need to check and see if it is a true day or not. So that's one of the kind of one of the things that we want to look at here. That's the other thing I don't like is also the fact that 825 we actually break this DR high. So this technically becomes a very, very late false day. And I don't see this happen a lot. I mean, it kind of rarely happens. In fact, now it makes me think, I wonder if I need to look at, just look at data and see what's coming out. Okay, so we have ADP, non-farm employment change that came out, and then we have ISM services. So that might have been news related that came out. All right, so let's take a look. So we're short, we're false, and our open location almost doesn't really matter. We have range expansion here as our dominant model. Okay, so we have this. Now, we did open below and we did breach, or open above and we breached. So I'm going to go ahead and put that there too. That just strengthens that case. So it looks like range expansion, looks like we have high probability of the midline breaking. And we kind of have this mixture. I talked about this too, which is RDR new high. This is a machine learning algorithm that looks at the probability that we'll either get a new high, a new low, or both a high low or no new high low in the RDR session. Okay, when we take into account the full, the full range from the ADR low or the ADR session all the way through the ODR session. So, and this may continue to develop during the transition. So maybe if it comes back up to here, right? So the idea is that we would have a high probability that we would break the high, right? That we would break the high, or that we break both the high and the low, which would be really interesting because the price would have to do something like this. Let's say we do this, break this, come all the way down, form a range expansion, and then come all the way down here the rest of the day. So that would be one scenario that could happen. As it stands, what we're looking at is a range contraction. Take that off. A range contraction is something that looks like this. Okay, so from 9:30 to 10:30, 10:25. This is what this next DR IDR formation should look like, is something like that. That's the dominant model. Now, obviously these can always break, but we're trying to put probabilities on our side. And so Since we've had so many of these range expansions, you should probably know what I'm going to say next if you've been watching them, which is the play is, let's give a couple of scenarios. Let's say that we open here in the middle. Okay, so at 9:30, we open right here in the middle. Okay, let me just do something here. Let me see if I can do this. Let's just spread this out a little bit more. Okay, so let's say price does this, comes up, boom, and then somewhere at 9:30 we open here in the middle. I don't have any sort of directional trade to take at this point in time. There's nothing to do because we're just in the middle. We're going to go down and then we're going to go back up. Okay, and that's what I'm looking for. I'm looking for a sweep on one side and then a move back to the other side in both cases, in any case, right? So let's say that I'm, that this kind of plays around up here, and then on the open it does something like this. Okay, that's great because now I'm expecting a full move down to here. Okay, so that's another scenario. And then, again, the other scenario is that this kind of comes down, before the market opens. We maybe do something like this. Boom, we're back up, and we're back up like that. So that's another scenario. But the point is that I'm not looking to play in this area on the open. I'm looking for, let's look for an extreme move one side, extreme move to the other side. If this doesn't hold, so let's say, for example, range contraction doesn't really hold, what we have is maybe we do something like this. Boom, it comes back up and it comes down here. A lot of times it gets held up here at the midline. So if we get held up here at the midline, boom, something like this, right? Then we look at something more like that. So the midline is still important with this. So that's kind of the scenario for ES for today is, again, range expansion, looking at opportunities from the extreme. So once the extreme has been taken out, looking for opportunities possibly to go to the other extreme. And then I have other plays. Once this area has been formed, this first hour, I have other strategies that help me continue to look for opportunities as price is moving in a particular direction. But mostly, like, I have some really good opening range breakout strategies I play, and I use this really heavily for those. Obviously, if I get a long signal, but I'm looking short because of this, this approach for context, then it helps filter out quite a few negative trades for me on my opening range breakout stuff, which I like. All right, so that is ES, and let's look at, this is so ugly. Okay. There's NQ, which is even uglier today. I don't even want to go through NQ today. It is so ugly. Oh my gosh. What makes this ugly for me? All right, I'll tell you what makes this ugly for me is we have what's called a triple day. And a triple day is when we have long confirmation, false day, and then back to long confirmation, right? And so this is a day where I went through and I looked at all my data, my 17 years worth of data, and I did an evaluation of these triple days and really could not come up with any sort of consistent pattern for how the day is going to progress. And so it became just something really, really challenging. So let's do it anyway, just for fun. Let's just see what NQ, our NQ data has to say. So let's take a look at NQ, and it's Wednesday. And then we have upside X plus, long, upside X plus, long, false. And then our open location is going to be above. You're going to see this number goes way down. Okay, so just notice we go from 32 records that have this pattern on Wednesdays to, because we open above one time, one time in 17 years. When I have data that's so sparse like this, that I have to take the day off. Okay, so I'm going to remove Wednesday, and now at least I have 10 records, and my dominant pattern is range expansion. So I don't, for today, let me just mention this too. So range expansion would look like this. Okay, you've seen it enough. It looks like this. I refer to the range expansion cousins. So similar to range expansion, and a lot of times when I get a range expansion in my data, I'll sometimes get a downside, right? So downside is when our high point is between the midline and the IDR high, or we'll get an upside, okay, which is midline to the IDR low. Okay, so it'll look like that. And I call these the cousins of range expansion. It's like these are really range expansion-y type of patterns. They just didn't quite make it all the way down, right? Or they didn't quite make it all the way up. So I call these the cousins. So on a day like this, I kind of expect either this or one of the cousins is what I'm looking at. But I do expect more rotational type of behavior from this, but we'll see. I don't know. This one's a little bit harder to predict. So NQ is a little bit tougher today. All right. So that is November 5th, 2025. And that's what I'm looking at. So another range expansion day. And I'm going to be looking for the extremes to get taken out one side or the other before looking for the other side. And I'm not trading in the middle. That's where bad things happen. Bad stuff happens in the middle. All right. Y'all have an awesome, awesome trading day and go make great decisions. Talk to you tomorrow.